1391.77, coming off of its worst levels yesterday, up 427. We have the S&P 500, the cash-settled SPX, trading at 2357.43. That's down 636. Mixed market here on the large caps, small caps, and tech, leading to the upside. We also have volatility still holding its bid, but I want to see the VIX over 12. A VIX over 12 means that you could see some greater price volatility that's going to be coming into the market going into the remainder of today and into next week. Now, taking a look at the fixed income markets, we have TLT, which is that hybrid bond ETF, trading up 117. Bonds really have blasted to the upside on the price action. Yields are coming down. Again, we pointed this out yesterday and over the last couple sessions. We're watching this bond activity, this rotation for basically a little bit more of a safety trade. We saw that action pick up yesterday and it continue after the overnight session and the early European session. There is some uncertainty about when that infrastructure play is going to come in as far as the stimulus package from the Trump administration. You're seeing that reflected here. Watch the rig counts that are going to be coming out. And oil and gas is on the move. And specifically, nat gas has been holding up. The weather has been mild, but there was a draw earlier on the API data. But we want to watch specifically crude oil and the rig counts here in the United States. If they continue to increase, whatever leverage we saw as far as the production cuts by OPEC and non-OPEC nations, that could be a little bit muted based on if we see that the rigs in the shale regions and so forth start to increase not only their production, but they're bringing more rigs online. Watch USO trading at 1146, down 7 cents right now, or 0.6%. A couple other areas of the market that I want to take a look at, and the first one is the consumer discretionary space. The reason why I want to take a look at that, and I'm going to use XRT, is that has been holding up very well today. We've had some notable earnings that have been coming across both retail and both big box and online, but as far as earnings, but the XRT is trading at 43.34, up 24 cents. That's holding up better than the S&Ps, which is the benchmark that I watch very closely, and where retail names are specifically represented very heavily in that broad-based index. XRT holding up here, that is a positive for the market. Consumer discretionary spending is going to continue to drive this market. Other areas that have been moving, let's take a look what's moving on earnings. And let me just actually go to, I apologize. I don't know where that list went. We saw Intuit, Yum Brands. Let me just find that real quick. Well, we had Intuit, Yum Brands, and OLED up to the upside. You had Hewlett Packard Enterprises, MGA, Baidu, and KBR Construction all to the downside. They missed on earnings. The Intuits and Yum Brands, they basically popped to the upside. One other notable stock, JCPenney, beat on earnings, but they guided flat on fiscal 18, and they said that they're going to close about 13 to 14% of the stores going through fiscal year 17 and going into 18. That is notable since JCPenney is down. Want to take a look at some charts, and as I said, I want to look at this crude chart. The reason why I want to look at the crude chart is we're kind of in this area where either the bulls or the bears are going to take control. This is between the 20 and 50-day moving averages, and right now with crude trading at the 54 level, watch that rig count. That could move this market today either to the upside or to the downside. You can see the API data, the American Petroleum Institute data, where they came out. There was a larger draw both in crude and in the gasoline stocks. As far as the stockpiles are concerned, that would have been bullish. We've been stuck in this range right now of basically 53.70 and 54 and some change. Haven't seen a breakout into that 56 level. That's where the bulls want to see it, especially getting over this 50-day moving average at 54.11. You want to see it hold that 53.77 mark. Otherwise, we could see a gravitation back down to that 52.51 level. That could not only put the brakes on and the energy sector, but it could put the brakes on the general market. Another segment that I want to take a look at visually, as I had noted, the bonds. The bonds have been moving up to the upside pretty dramatically, and we pointed that out a couple sessions ago. You saw it hold its 50-day moving average right here, and you saw it break the 20-day moving average. That to me is telling me that both midterm and short-term bulls are gaining control in the bonds. There's quite a bit of cash out there. There is some uncertainty both on fiscal policy, tax policy. You're also seeing, while the data has been strong on the employment side, you're going to start to see questioning about whether there's wage inflation, and you're also the tax reform. We're hearing more, and that's why I also wanted to point out retail. Retail held up because we just don't know what the border tax reform is going to be, and that is still being discussed. And retail's holding up, but bonds popped. As a matter of fact, you're seeing now TLT at 121.92, getting up in these highs that we haven't seen basically since January of 2017. And again, a break above that level, that means that we could be challenging this area where we had a gap down after the election. But again, there would have to be some pretty significant rotation into bonds because of some negative headlines or negative economic data, which we just haven't seen at this juncture. All right, folks, that's it right now for what's hot on the open. We'll be back here at 1:30 Eastern time on MarketStream.live, where we're going to talk about strategy now. I'm going to have the poor man's cover call. Join us then. Take care.